When evaluating opportunities or options for investing, the most important variable to look for is not just the rate of return, but the return on your investment. In our October 2025 bond auction, we have two papers on issue. That was the FXD1 2815 and FXD1 2021-20. These two papers give us two opportunities for passive income through lending the government through bond auction or a bond purchase. These two papers or these bonds have two different coupon rates, where the coupon rate for FXD1 2018-015 is at 12.65%, while the coupon rate for the FXD1 2021-020 is at 13.444%. Those two rates are gross of tax to be withheld at the rate of 10% of the gross coupon rate, because these papers were originally issued for a maturity period or an horizon that is above 10 years. In evaluating these two papers to answer the question on whether to buy or not to buy, the most important element here is to calculate the total return on investment, and the better if you use the net present value approach, where you're discounting the future expected cash flows to their present values. But in order to make that our process of analysis not that complex and number intensive, then we'll look at generally what would be the general picture of the return on investment of the two papers. And considering the FXD1 2018-015 as per this short schedule, if you are investing a face value of 1 million shillings, a face value is the bid, the value of the bid that you are placing, the amount that you program at the amount tab when you are placing the bid. Then the cash value is given at the after the auction, which may differ from your face value because of the outcome of the auction, which maybe has derived a premium or a discount on that particular issue. And therefore, the cash value is the amount that is required for you to pay, but what is documented as your investments under your portfolio in your DAO ZSD account valuation is the face value. And therefore, in this case, for one targeting to invest or bidding a million in the FXD1 2018-15, they will be required to pay a cash value of 1,053,179 shillings. And we shall be looking why that difference in a short while. And the total coupons to be paid out from this instrument for the remaining tenure of about 7.7 years will amount to 1,012,000 shillings. If you calculate the return on investment for this paper for a new investor in this auction, they will be getting a 12.0112%. The coupon amount for this paper is 126,500 shillings for a person who is investing a million shillings, because the coupon rate is 12.65%. So if you multiply 12% or you determine that 12.65% of the amount invested of 1 million, you'll get 126,500 to be paid out 2 times in a year, because a bond pays 50% of the coupon at the expiry of the first 6 months. Then the balance of 50% is paid at the end of the other 6 months, as given in the prospectus, the schedule in the prospectus. The discount for this paper amounted to 340 shillings out of the auction, and we're looking at those details when we're looking at the general outcome of the auction. Looking at the second schedule for the same analysis for a return on investment for the FXD1 2021-20, for an investor bidding for a face value of 1 million Kenya shillings, they will be required to pay 1,019,877 shillings. As we have explained from the first one, the cash value and the face value are different things, because the cash value is the actual amount to pay out of the auction, and the face value is the value that you bidded for. The coupons to term for the remaining horizon into which we are investing as new investors to this paper amount to 2,151,040 shillings. Calculating the return on investment for this paper, the return on investment will be 13.182%. The coupon for this paper is 134,440 shillings because the coupon rate for the paper is 13.444%. And the discount amount is 5,977, as we'll be looking at the full details of the bond outcome in a few minutes. So that is a general picture of the outcome for these papers by determining their return on investment, because that is what gives you overall what you are going to be generating from your investment, not just looking at the actual cash flows that will be coming your way for the remainder of the maturity period for the investment. We shall be looking at the specific bond auction outcome for the October 2025 bond auction in a few seconds, so don't go away. Welcome back to our continuation of the review of the results for the October 2025 bond auction, where the two papers FXD1's 2018-15 and 2021-20 were auctioned. The 10 years into which we are investing as new bidders to these papers, for the FXD1 2018-15, you are going in for 7.7 years, and 2021-20, you are purchasing this paper for a remaining maturity period of 15.9 years. This is one of the many parameters that you use to base on whether to select or to pick a paper for investment or not. For those who are looking for a medium-term investment opportunity that guarantees a return, then the 7.7 years FXD1 2018-15 becomes a good investment. For somebody looking for a longer duration of investment for a guaranteed return at 13.444%, which we have seen will give us about 13.1 return on investment, then the FXD1 2021, the FXD1 2021-20 will be a good investment for a guaranteed return. The due dates then, becomes 9th of May 2023 for the shorter paper, that is 2018-15, and July 22nd, 2041 for the longer investment paper, that is the FXD1 2021-20. This was both an oversubscribed auction and also a discounted auction. Oversubscribed because the government was looking for a total sum to be borrowed amounting to 50 billion Kenya shillings for budgetary support. And after receiving bids, the total amount bidded for or requested for amounted to 118.887 billion shillings, which translates to 237.78% subscription. That is in excess of 137.78%. In terms of performance, the shorter bond FXD1 2018-15 received a total of 44.992 billion worth of bids at a performance of 88.98%. Then the FXD1 2021-20 had total bids amounting to 73.895, translating to a performance of 147.79%. So most investors in this case went for the longer paper or the longer investment period for a guaranteed return of 15.9 years provided by the FXD1 2021-20, and that also could be informed by the fact that this longer paper was giving a return in terms of coupon that is higher than the FXD1 2018-15 at 13.444% compared to the 12.65% from the FXD1 2018 2015. Much of the accepted bids came from competitive bids. Those are the fund managers and individual investors who are putting in any amounts above 2 million Kenya shillings. And 24.645 came from the FXD1 2018-15, and 53.704 billion was accepted from competitive bids in the FXD1 2021-20. For non-competitive bidders, the FXD1 2018-15 accepted bids of amounting to 6.924, while the FXD1 2021-20 non-competitive bids accepted amounted to 11.289 billion. That means that the total bids rejected in this auction amounted to 33.613 billion Kenya shillings. The market weighted average rate, that is when you take the total competitive bids for the specific bid in question, then you take an average of what has been quoted as a return or yield expected by the bidders. The market weighted average rate for the FXD1 2018-15 stood at 12.78%, which compared with the coupon rate of 12.65. That means that the investors requested or demanded for a yield higher than the bond yield or the coupon yield. Then for the FXD1 2021-20, the market weighted average rate was at 13.444%, which is also higher than the coupon. The market weighted average rate was at 13.6135%, which is also higher than the coupon rate at 13.444%. Then after doing the adjustments, the market weighted average rate for accepted bids became 12.6518 for the FXD1 2018-15. And when you compare that market weighted average rate of accepted bids for the shorter paper and its coupon rate, the accepted rate of return or the accepted yield out of the auction is slightly higher than the coupon rate for the bond. And what that means is that the investors have to be compensated for that extra return that has been accepted to be paid out in order for the government to get their required or borrowed amount of 50 billion. And for that reason, then the clean price received a discount of 0.034 for every 100, hitting at a clean price of 99.966 for every 100 shillings invested. For the second paper, FXD1 2021-20, the adjusted accepted market weighted average rate of accepted bids was 13.5285%, which is again more or higher compared to the coupon rate of 13.444%. And for compensation then, the clean price stood at 99.4023 for every 100 invested, because that attracted a discount of 0.5977 for every 100 shillings invested. Taxes to be withheld on these investments are calculated based on the clean prices and not the dirty prices. The dirty price is used to determine the cash value of what you're investing or what you are required to pay for your bidded amount. And to get the cash value, you take your accepted bid value or the face value, divide by 100 shillings and multiply by the dirty price, where the dirty price combines the clean price and the accrued interest. And therefore, to get those prices, the price of 105.3179 is given by getting the clean price 99.966 plus the accrued interest of 5.3519 for every 100. For the second paper, FXD1 2021-20, the price to pay, the dirty price, of 101.9877 is gotten by taking the clean price of 99.4023 and to it add the accrued interest price at 2.5854 for every 100 to get the 101.9877. And those were the specific details for the outcome of the bond or the bond result as explained. Thank you for watching and see you in our next video.